So why is the United Kingdom one of the safest places where you can store your wealth right now at the moment? Although there's a lot of talk about millionaires exiting the United Kingdom right now, the opportunity that people are missing is the fact that the United Kingdom is a safe place in terms of security and for storing your wealth for the long-term period. The first thing that makes the UK a strong bet is the fact that it's got a completely transparent legal system. There's lawyers that are in practice that specialise in specific fields, and there's barely any corruption, meaning that it's a very strong place in terms of legal framework. When considering currency, the United Kingdom is also one of the most stable places. The pound sterling GDP is ranked 4th strongest currency in the world right now. There's also completely transparent title ownership, meaning that you can purchase 100% of the freehold as a foreign national. And not only that, there's portals online where you can actually go and view information, and you have to pay a fee to have access to a title, but you can actually see ownership of each individual property. Now, there's some specific cases where it doesn't quite work. Maybe the data's out of date. Maybe someone's owned the property for kind of 30 to 40 years. But 95% of houses, that's not an actual fact, but that's just from my experience. 95% of houses that I've looked at, purchased the title deeds and tried to find the information of the owner, is generally there and available. And it will either be a person's personal name or a company. And we're going to dive into that a little bit later. History also shows that property prices in the United Kingdom double every 10 years. Now, everybody talks about this. We know that it's a fact. However, we can go back on history. We can look at history of prices in different locations, and we can look into more specific details. So what I'm going to do for you is provide some knowledge and insight on what to look for, and I'll guide you through that whole process as well. We also know that in times of uncertainty, where people look to invest their money into somewhere safe, the UK is a strong bet. The reason why the UK is a strong bet is because there's people that consider real estate, similar to gold, similar to stocks and shares, as a way to diversify their portfolios. And that is exactly what I look to do here at Bullseye Properties. The first thing that I know that people are going to be thinking is, well, what about Brexit? We know that Brexit's caused some uncertainty. I'm not an economist, so I can't talk based on knowledge and facts. But what I do know and what I do recognize and what I have seen is that there are people from international markets such as India, Singapore, and Hong Kong in China that are all looking to go to the United Kingdom for a place to store their wealth because they can purchase the freehold, which means that they can purchase the land as well as the property that the land is on, and they can own 100% of that. And if they own that asset in cash, meaning that there's no bank leverage, it's secure. Their title is secure. Their name is on that title and it's not going anywhere. The only way in which that property could ever be taken away is if there is some kind of legal disputes, meaning that other people have the rights to take that property back. And just on the back of that, that'd be an extremely complex case, which would take a lot of legal support, and it's very, very rare. Another thing that people might say is that property prices can crash. Correct. Property prices can crash. When we look at 2008 and we look at the house price index, we saw a dip in house prices. But what we also know is since that dip in house prices, since 2008, people that bought properties in 2008 and before that are now seeing massive, massive gains. Property prices have now doubled. Some places maybe even tripled. And it's a very, very strong investment, no matter what market, when you consider the long-term growth. Here's an important consideration then. Property prices do double every 10 years, yes. That's a fact. Everybody knows that within the United Kingdom. However, not in every location. Some locations where it's deprived, where there's a lot of crime, and where people don't necessarily want to be, the prices aren't increasing as much. And this is what I see with general buy-to-let investments in the United Kingdom. Generally, people will look at a property that's between £80,000 to £250,000, and they'll look at it based on the yield. Now, when considering the yield, fantastic. If you're looking for a property to just generate yield, that's brilliant. What we need to consider when looking at properties generally between £80,000 and let's say £250,000, the average house price in the UK is actually around £300,000, but they're typically new build properties. With the capital growth, it really depends on the location. Now, I'm talking specific clusters. The UK property market as a whole has doubled every 10 years over history. Looking at the house price index, that's something that people can see transparently. But in different pockets where it's not quite so desirable, i.e. locations where there's high crime, where there's some deprivation, where maybe there's not so much going on in terms of community, maybe where there's not quite so much infrastructure, maybe where there's a lack of schools, maybe where there's a lack of train stations and other infrastructure that allows people to travel to different parts of the UK, we see that the actual real capital growth in those locations is poor. And another thing that people might say when considering the United Kingdom is that there are other places in the world that offer higher returns. Correct as well. There are other places that offer higher returns, but we need to compare apples for apples. We look at the Dubai market, and the Dubai market is very, very strong. But we also need to look at Dubai from a business context, because as property investors, we're looking at property as a business. When considering the product, which is property, we need to consider supply and demand. Right now, there's a hell of a lot of demand for Dubai, but there's also a hell of a lot of supply. And what I've been seeing is that developers have got so many properties that are available that are being sold off plan, but those properties are now not being sold. It gets to a point where there's an oversupply of properties, meaning that there's not enough people to purchase those properties. And when we consider the long term, what do you picture Dubai to look like? Is Dubai going to be a place where there's an oversupply of properties? Or do you think there's going to always be an undersupply of properties and that people are always going to be going there and always going to be buying all these off-plan properties? What we know in the United Kingdom is we have an undersupply of properties that are available for people to live in. We also know that there are a lot of different problems when it comes to actually renting out properties. And we've got renters reform that's coming in. We've got other legal legislation that's making it much more in favour of the tenants that are living in those properties, which I personally think is fantastic for the people that live there. But in order to get around it and to get around it correctly, you need to have the correct management in place so that you understand that you're getting a good quality tenant, that they've been vetted correctly, meaning that they've gone through all the correct checks, that they can pay for the rent, that they're not going to eventually stop paying the rent, that you've got a good person in place. Also, when considering other property markets, we know that there are locations like Indonesia, in Bali, where people can purchase a villa generally for about 200,000 euros, and you can purchase that property. You'll have a 25-year lease, and then you can rent out that property on Airbnb. Renting out that property on Airbnb is generally getting people from 20 to 40% return on investment, which is fantastic. But when considering the long term, you're purchasing a 25-year lease. In 25 years' time, that 200,000 euros is going to have depreciated, meaning that you then need to renew that lease, which is going to cost some more money. Also, when considering Airbnb as a property investment market, we need to compare apples for apples. When we're comparing United Kingdom's buy-to-let market, 7% yield with a long-term tenant in place, comparing that to Bali's market, where you can purchase a villa for around 200,000 euros and you'll get 20% returns using the Airbnb model, which is short-term stays, they're two completely different strategies. And what we actually need to do is look at apples for apples and consider the United Kingdom's property market with an Airbnb model short-term stay. That's what we're looking to do here at Bullseye Properties. We look at the short-term rental market for higher value assets in locations where there's lower crime, fewer dense populations, and a place where people would actually want to go on holiday. I personally believe that this strategy offers a really nice combination of freehold ownership for foreign nationals, for people who are looking for a place to come and stay, because if the property's on Airbnb, then you still get access to go there if you was to visit the country. Also, you can make strong cash flow. Although the cash flow is fairly turbulent, you can make strong cash flow and you get strong growth on the properties, meaning that you will see prices doubling every 10 years.